The media is reporting that house prices have hit a floor. Let's have a look. Good afternoon, everyone. Florian Heise here, and welcome to another episode of Heise Says. Got my Stein in hand, had a good lunch, and I thought we'd discuss this article. Now, this is from the ABC. Apparently, our house prices may have found a floor in July, according to the data from CoreLogic. Now, remember, this morning I reported on the collapse of Raylan Group, a huge developer focusing on apartments and units in Sydney and Gold Coast with $500 million of debt. Then before that, I discussed in a video about Australians in arrears with their mortgages. And Martin North is discussing over and over again just about the increase in mortgage stress for Australians. The data seems to be that we're just starting to see the actual implications of what's happening in the economy. Our GDP growth rate, it's going down. The United States have dropped their interest rate. They've cut interest rates today. And their economy's meant to be fine. Their economy's meant to be fine. And now, I'll go to my favorite website here. And I'll remind you of the Australian economy, of our export market. Look at what we're exporting. Simple materials, what we're importing, and what we're exporting it to. China is our number one exporter. Number one destination for exports. Right now, China and the United States are in a trade war. Now, if we look here, this is China. You can see their economic complexity much higher than Australia's. Much higher than Australia's. Look at what they're exporting. Look at the complexity of what they're exporting. We're iron ore. They're, broadcast equipment. I'm actually using it. This was made in China. This was made in China. All the things in front of me were made in China. Look at what they're importing. But what's important is their destinations. United States, 20%. 20%. So if we're seeing a slowdown in the United States economy, and I would imagine that a decrease in interest rates is a sign of that, even though they're not admitting to that. But let's just assume that that's a cause for a slowdown in their economic activity with one of our major export partners for 35% of our exports. That, I would imagine, may have an impact on Australians, may have an impact on day-to-day Australians, because it'll flow through the economy. And then once that's filtered through, we will start to actually see what's happening with our housing sector and housing prices. Because if we look at here, this is just the state of building approvals, and I won't go through the details, but you can see the trend is down and down. So from June 2018 to June 2019, it's down. Total dwelling unit approvals down 20.9%. Okay, so the construction sector is going down. This is a sign of it right here. It's a big section of it. That's going to affect people's day-to-day. Now, when it gets really difficult, we heard this from the video on Australians in arrears, they will generally hold onto their property rather than sell at a loss because they still have to pay it off, and they may hold on too long. People are not paying their debts. So if this is all starting to come together, I don't know how anyone can say we've found a floor yet when we haven't really seen what happens when people start hurting. That's what I'm concerned of. So what this tells me, and I'll zoom in a bit more to make it a bit bigger, is this just the media trying to spin a particular narrative, or is it just pushing one argument? Because there are a lot of people with vested interests to keep the property prices going up. You talk to it was an expert on Facebook selling courses on how to become an ultimate property guru, one of these things, and bragging about their huge portfolio of millions of dollars. I just buy one house and then rent it out, buy another. It's easy. You just use the equity that always grows. And I asked them, well, what are you going to do if it decreases, or what's your loan to value ratio? It could disappear really quick, guys. So there are further signs Australia's worst housing downturn in modern history may be drawing to an end, with CoreLogic's monthly index showing further modest price rises in July. Okay. I don't agree with that. I don't agree with it. just based on what I've said before. But we'll read through this. We'll read through it. Maybe I'm wrong. Maybe I'm wrong. Although I did check my own house at the bank, on their website, their guesstimate, it's gone down again. It's gone down. Lucky this is a forever house, and it needs a lot of work, so I got a good deal, but still. The company's hedonic home value, should that be hedonistic? Home value index showed a 0.1% rise across the combined capital cities last month. But nationally, including regional markets, prices were flat. 0.1%. Is this a joke? Are they trying to claim that that's sufficient data or a sufficient swing to say that we've hit a floor? Haven't they done any investing? Haven't they seen, a dead cat bounce? You go up, it's going down. Oh, it's all good. It crashes back down. Haven't they seen that? They need to just spend 5 minutes doing some crypto at an IPO and see how it changes. CoreLogic's head of research, Tim Lawless, said nationally housing prices may have found a floor in July, and it was the big East Coast markets that were generally posting gains. Sure. We're not really seeing signs of recovery just yet, but absolutely we are seeing housing prices stabilizing, he said. Remember, this is all assumption. We did see values rise last month in Sydney and Melbourne. In July, we've actually seen that become a little more widespread. Sydney values are up 0.2%, as are Melbourne values and Brisbane values, and also in Hobart and Darwin, we've seen a subtle rise in values. Well, I saw a decrease in values this morning from last month in my house. From the bank estimates, what does that say? So it means I'm against the trend. Oh, no, you're right, Brisbane's down. Damn. Whereas we still see values drifting a little bit lower in Perth and Adelaide. They're also dropped a bit in Canberra. So this is the home prices July 2017. This is annually. So I changed it here, and we can have a look at the different rates. But Sydney's down 9%. Melbourne's down 8.2, Brisbane's down 2.4, Adelaide's down 0.8, Perth 8.9. Look at that, Perth and Sydney. And this will be different in different suburbs as well. You need to realize that how granular the data is, how closer we zoom into different areas and cities, you're going to get different outcomes. Hobart's up, Canberra's up. I wonder if Hobart's up because the cost of living there. But then again, it's a bit funny in Hobart. I just like it. Darwin's down. All capitals are down, regional down, and national is down. So we'll jump to the actual website, and we'll change that to monthly. This is what they're talking about, these increases compared to these decreases. So is that telling you, seeing that data, is that telling you that this found a floor, a bottom? I don't know. So, stimulus for the market. Mr. Lawless said a range of factors had halted Sydney and Melbourne's steep slide in prices, which was the worst property downturn that those cities had experienced in decades. One of those was the federal election outcome, which scuppered Labor's proposed changes to negative gearing and the capital gains tax discount. We've seen a lot of that uncertainty around tax reform taken off the table, which is starting to see investors pricking their ears up once again, Mr. Lawless said. Westpac's consumer sentiment survey has shown a significant rebound in both the time to buy a property and house price expectations indices. Mr. Lawless said interest rate cuts over the past 2 months had also boosted demand, along with looser lending restrictions from the bank regulator. So, had it boosted demand? I guess it has. It's increased people's access to credit. Both of those things. So it's increased the demand. So that means it's going to push over the demand curve in the supply-demand curve for housing. We have seen lower mortgage rates, which is providing some stimulus for the market, he said. Mortgage rates haven't been this low since 1950s, so you can see why borrowers are taking advantage of these very low interest rates. And they're also taking advantage of the fact that it's become a little bit easier to get a loan in the sense that APRA's revised serviceability assessment are a little bit lower over the past couple of months. Is that legitimate? Should they be doing that? Should APRA be acting like that? If there's signs of economic decline, should they be acting like this? Are they acting in the best interest of consumers? Isn't that their role? Someone let me know. Maybe I'm just being naive. Maybe I'm showing my naivety. You know, maybe that's it. Probably. The lowest variable mortgage rates are just below 3%, with most major lenders offering rates between 3.1 and 3.4% per annum, and many offering fixed rates of up to 5 years for 3.5% or less. This is shown up in auction clearance rates in the big two cities, which are now well above 70% in Sydney and Melbourne, a level typically associated with price increases. Or it could just... Okay, 70% is irrelevant. I want to see the total numbers. I want to see it relative to previous periods and relative to the population. You know, you need a little table there so we can compare it. It does, you know, 70% is whoop-de-doo if the total number has significantly decreased, if people are pulling off the market because they can't get the prices they expect. If it's so bloody high because people are crashing, which we're not seeing yet. July saw the best monthly average clearance rates in Sydney since May 2017, and in Melbourne it was the best since October 17, observed AMP Capital chief economist Shane Oliver. Recovery won't be rapid, experts warn. So they're talking about a recovery. They're talking about a recovery when I'm here thinking that we haven't even seen the beginnings of it. We're only starting to see the flow through of unemployment. You know, I mean, why are we talking about a recovery when unemployment it hasn't ticked up yet, according to the ABS? Roy Morgan's telling us it's over 9%, and you know, a company with $500,000 in debt. And I spoke to a friend this morning and told him about the Ruby Tower on the Gold Coast. Now he's questioning about it. He said, "Oh, we were hoping to get it," but you've got to think as well. If you were, you know, even if it all goes ahead, are you going to trust them? Would you not want to make sure you get payment in advance? You know, that's the thing, because the subbies, the tradies, they can be left holding their wallet, asking for the breadcrumbs. So we probably will see values edging a little bit higher across most markets, but I don't think this is a recovery phase. This recovery phase is going to be a rapid one, he said. There are still some fairly stiff headwinds around the credit space. We are still seeing lending being very conservative, focusing on a lot more on individual expenses. Dr. Oliver said there was also economic reasons why house prices were unlikely to take off again, like they did in previous occasions when the Reserve Bank cut interest rates. Well, yes, because the interest rates are insanely low already. They're insanely low. Don't worry, negative interest rates will fix it all, I'm sure. I'm sure that'll fix it. It'll force everyone to buy houses. Still, yeah. Household debt-to-income ratios are much higher. Bank lending standards are much tighter, such that a return to rapid growth in interest-only and investor loans is most likely. The supply of units has surged, pushing Sydney's rental vacancy rate well above normal levels, and unemployment is likely to drift up as overall economic growth remains weak. Okay, I would say as the economy goes into recession. Mr. Lawless said even if there was a return to rapid price growth, regulators would likely be quick to stamp it out. If we do start to see an acceleration in housing price growth, particularly from an investment perspective, we probably will see some additional policy levers being pulled in to take aim at housing price markets, keep them relatively stable, and try to minimize the upward trajectory in household debt. So, what do you think, guys? Do you think we've found the floor in the housing market? I do not think so at all. Not in the slightest. I think we're only starting to see tough times begin. I think it will take some time for it to filter through because interest rates are so low. I was talking to another colleague today who was talking to a friend who had to do more shifts because her husband lost the job. That's what happens. People make do. Times will get tough. You'll tighten your belt like anything. Consumer spending will go down. Consumer confidence, which is, already going down, will keep going down. So no. I mean, let me know what you think in the comments. So have we hit the price floor? Is now the floor of our housing market here? Is now the time to get in, guys? Should I be getting in? What are you going to do? What do you recommend? Anyway, guys, like, share, and subscribe. I'll talk to you later. Have a good day.